Yo, it's your boy, Iluma. Dumb Money, Doctor. We're doing a little review on some earnings releases that I think are kind of neat, but I'm super dumb and I have no idea what I'm doing. Like emphasis on the dumb in Dumb Money. So this is not financial advice. You will lose your shirt and work the corner at McDonald's just like I do if you copy my trades. These are just some things that I picked up and that I thought were interesting and wish I could pick up if I had the money for it. So here are some earnings releases coming up pretty soon. First one I got for is AMD. Let's pull up the chart for AMD on TradingView so we can see a little better. I'm going to put this on the 3 months so you can see our volume profiles on the left. These big red lines here, this is I think this is like a pennant, very big pennant. This is on the daily though, or the hourly. I'm going to put this on the daily. Yeah, look at this. Actually, it looks more like a falling channel at this point, but I don't know. It's technical analysis is all perspective anyways. It's all a bunch of bullshit. So let's see. Falling channel, not great. I think AMD, I picked up the 100 strike. I didn't pick it up, but I wish I did. This is super far out. This is until June of 2023. See our volume profile is showing the low at 99 and the high at 163. We're kind of at the bottom of the 70% trading volume. And I think 100 would be a fantastic price to pick up some AMD on. Yeah, I know it's not NVIDIA, but still, like it still seems like a pretty darn good price for AMD, considering the trading volume. Just technical analysis. Ignore the smiley face when I wiped a 1K account a year ago, because that was my only winning trade. Okay, so if you were to take this down to the 100 from its current price of 118, that would have to be a decrease of 15%. Based on the earnings release, 15% drop. That's totally possible, but I don't know. Let's check out the financials here. Again, I'm an idiot. I have no idea what I'm talking about. EPS seems to be trending upwards, which is awesome. We're expected to be even higher this time around. That's great. Yeah, it's been trending up for several quarters now. Revenue. Ooh, okay. Well, revenue is iffy. If you go 1 week out after earnings next Tuesday, and you grab the 100, you can get a $41 credit. Oh, did it move up today? It did. It did move up. Okay, we had a lot more credit before. Yeah, so now you can get like a 4%. Dang, it was 7% yesterday. I wish I had jumped on that then, but I didn't have enough buying power. So 4% in 1 week with a 92% chance of success. Again, I'm not making any like speculation on the direction because I'm an idiot. I have no idea. I do not understand fundamental analysis. Never tried. Next on our list is Uber, 60 cash secured put for next week. This one I actually did pick up because I had enough buying power for it. So next week after earnings also, this one's on the 5th. Okay, so this is on Wednesday. So you have a little more theta decay before you actually get to that earnings release. I actually picked this one up earlier today. Not sure what price I got it for, but if you went with mid, you might be able to snag $67 for $685 of collateral, which is great. That's just about 10%, probably like 9% after commissions and fees, but 9% in 1 week. That's even better than AMD. Let's show you the chart on this. This one's not as far out of the money though. Wow, look at that huge green candle today. Woo! This is the 3 month volume profiles. Got us at 60 at the low end and then 67 on the high end for the 70% trading volume. So I think that's pretty good, right? That puts you right down here at this level of support. And if you scroll out, the last time it was at 60, it was not there very long. It popped right out of it. Huge pop out for earnings. I guess we were expecting some bad earnings and then had some good ones and flew out of that. And we've never been beneath 60 or like 59.50 since August of this year. So I think this is a pretty solid level of support. Even if you do get that drop, it's still, I think, a pretty good level of support just based on stupid ass technical analysis, which means literally nothing. So that would be a 10% drop, which is totally possible with earnings. It'd have to be pretty bad, I imagine, but totally possible. So not quite as safe as our AMD play, but you do get 9% versus 4%. That's, and our pop here is only 76%. But I actually did take that one because I am a gambling man and I have an addiction. I have a problem. So let's check out Palantir is the next one. Everybody loves Palantir. Everyone and their mama loves Palantir. So for the 65 strike, which is really, really far out, you can get 100 for $2,400 in buying power. So you're looking at a 2.4% return on your collateral. So this must have gone up today as well. Yeah, it did. 81. Sheesh. 75 seems to be about the middle of the volume trading. 64. And look at that. It touched it and flew back up the other day. Oh, I wish I had money to buy. I wanted to buy a call, not even sell a put. I wanted to buy a call because I was so confident it was going to rocket out of this. But I had no money because I'm a broke ass. So whatever. But yeah, so if you wanted to bet that this wouldn't touch 65, that's a huge move. 20%. Again, you get these huge like move protections with very little credit received though. So 2.5% return. If you want a safer option, I think Palantir is great. Plus, everybody wants to buy. Everyone wants to own Palantir. Good level of support even before that is probably around here, right in the middle, where all this trading volume is 75. And this is also seems to be a pretty solid level of support at 70, 72, 73. Oh, I'm an idiot, dude. I was looking at the wrong freaking day though. I'm going to cut some of that out because I was looking at the wrong date because I'm a moron. 75 strike is 300. Slightly under 10% on your collateral, maybe like 9%. Pop is 67%. Come down to 73, you're looking at 71% pop and maybe like a 7% return on your collateral. Our 65 is well down here now at the $74 credit. That is 3%. Okay, 3% is not bad. 3% in a week. Like it doesn't sound like much when you say like 12, 15% return, 25%, but like that's a week. That's 1 week. 3%. Very nice. Next up is Chipotle. I always see this and read it chimichanga. 55 strike on Chipotle. I got this one too. I actually picked this up because it's pretty cheap to get. I don't remember what I got it at, but you can get it currently. It's 71 for sure, maybe 73. And this is almost a 10% return on your collateral. It is not super safe though. It's pretty close to the strike, but check out the volume profile. Like it sits you right at 55. Like that's where you want to buy anyways. So if you want to own Chipotle, I think 55 is a great level. If we zoom out, yeah, this is why I liked it too. Look at this. It touched it like 5 times. It touched 55 5 times. Never broke through it except for like this one time, but then, no, I don't think it broke through it. Nice. So it left 55 in September, 9/11.
Sorry, you're canceled.
And it never looked back. It is very possible to get hit though, because that is only a 5% drop. But it's saying the pop is 81%, which is pretty impressive. I think that's impressive. Let's check out the financials on Chimichanga. We got our earnings. The EPS is a little funky. Like it looks like it's higher than in previous quarters, but there's no clear trend to it. Maybe about the same. Yeah, same EPS estimate this time around. Revenues are up though. That's because they got that delectable brisket. I don't know what all the other meats taste the same, but the brisket, it's that little they put in there. If I could afford Chipotle every day, I would eat it and I would become fat. All right, AI. I also picked this one up just because I love selling puts on AI because the collateral you get is nuts. So AI 25 for this one's a bit farther out. So the 228 on AI here. Yeah, the earnings is not next week, but I got this one anyways just because it's so juicy. I already had some 30s, which gained like $50 today. I pulled out the 25. You're going to want to shoot for mid because this is a wider bid ask spread. There's not very much open interest. So if you can get mid here, you're looking at $41 on $270 of collateral. That's like 20, 21%, 22%. It's huge. It's huge. Okay. That's pretty big. So let's check out where that is on the AI chart. It's also great on the chart too. Volume profile, past 3 months. Putting us in the middle of 38. Bottom, we're at the bottom. The bottom is 32.50. So that's our buy signal. I mean, when I see that, I think of that as a buy signal. So that's great. And then the top will be 42. But let's zoom out. 25 puts us down here. And let's get a little more time out here. it was riding 25 for a while, 25 to 23. You know, we come out 6 months, and now we're looking at right around here, 23. I think 25 is awesome. And let's see how much of a drop that would have to be to hit 25. There's a 21% drop. Shut up, timer. In a month? Yeah, in a month. So totally possible. But I'll take 20% return month after month. Please, daddy. That's dope. And if you want to get really crazy, like look at this chart. It's been holding this 30 mark pretty well, 30, 50. If you wanted to do 30, which I did that as well. You can collect $1.88. So $188. That's almost a 50% return. That's like 40%. Stupid. I could have done that today. I should have, but whatever. I would have made like 30% on it already. Whatever, man. I'm not crying. You're crying. All right. Last one I got for you, Celsius. 20 out in March. So this one's pretty far out. If you want to wait 50 days, I think Celsius is cooking with fire, but there's no guarantee here. So Celsius has been on the down run for a long time here, for at least a year. And if you follow these red bars up, they are terrifying. God, look, this was a 15% drop in 1 week. Oh my God. And it just kept falling, riding this Keltner channel all the way down until recent history, until October is when it finally popped off of it. Oh my God. If you were selling credit spreads, you got cooked. Bit roasted all the way down by Gordon Ramsay and Chef Boyardee in the flesh. But now if we take a look at the 3 months, look where it shows you the buy and sell signals are based on the trading volume, 26 and 30. And we're sitting at 25. The lowest here was 24.70. I think I said 20. Yeah. Was it 20? Oh, I'm still on AI. I'm such an idiot. God, it hurts being this dumb. Yes, the 20. So you can grab $55 in exchange for $200 of collateral. 25%. I like 25%. Granted, this is almost 2 months. So it's like, oh no, 14% monthly returns. Oh no, so bad. Ooh, it'd be so bad if I got 13% monthly returns. Oh, that's better than SPY. That's better than SPY's 30-year average. If we get it, right? You know, it's possible. It's been downtrending for a while. It seems to have just broken out of this 25. So if we don't pop up above 26 again and stay above it, we might be in for some pain on this one. But, you know, we could always roll down if you take the 20. If you are confident, you're like, I am a Celsius girl. All my college homies love Celsius, and you want to go at full balls deep mode into the 25s, you can collect $234 for $400 of collateral. That's over 50%. Oh my God. But you have much more risk here, right? Because we're at the 25 now, and things have not been looking good for Celsius. But for the past 3 months, it's really just been chop. We've just been hitting new lows recently. So I don't know. I don't know that I would gamble at 25. 20 for sure. All right, that's all I got. Thanks for watching. If you want to watch more, you're an idiot just like me. Subscribe, hit the like button, helps the channel. Appreciate it. Bye, bitch.